We regularly receive bills from various service providers. We also get receipts when we pay for items that have been purchased. Documents such as bills and receipts are called source documents. Source documents serve as legal evidence for any business transaction. Transactions recorded in the books of accounts must be duly supported by source documents. Let us consider some commonly used source documents. Click each source document to learn more. When goods are sold for cash, the seller issues a statement called a cash memo. A cash memo provides details of the items sold, such as the quantity, rate, and price. The cash memo is prepared in duplicate. When goods are sold for cash, the seller issues a statement called a cash memo. A cash memo provides details of the items sold, such as the quantity, rate, and price. The cash memo. When goods are sold on credit, the seller issues a statement called an invoice. An invoice is also known as a credit memo or a bill. An invoice provides a list of the items sold along with the quantity, rate, and price. It also mentions the name and address of both the seller and the buyer. A receipt is a written acknowledgement of the money received from a customer who had purchased goods on credit. It contains the date, amount, and the name of the customer. It is important to note that in the case of a check payment, the receipt becomes valid only after the realization of the check. The buyer prepares a debit note when he returns the goods purchased from the seller. The debit note contains details of the goods returned, the name of the supplier, date of return, and the reason for returning goods. By issuing a debit note, the buyer debits the seller's account. The seller prepares a credit note when he receives the returned goods that were once sold to the customer. A credit note contains details of the goods returned, the name of the buyer, the date of return, and the reason for returning the goods. By issuing a credit note, the supplier credits the customer's account. A pay-in slip is a form which facilitates the deposit of money in a bank by a customer. It provides details such as the date, account number, name of the account holder, mode of payment, and the amount deposited. The counterfoil bears similar information to the pay-in slip. It is stamped and signed by the bank official and then given to the depositor. A check is a written document which orders the bank to pay money to the person mentioned therein. Two parallel lines drawn across the top left corner of a check makes it a crossed check. Crossing a check restricts the money transfer only to the account of the person mentioned on the check. A voucher is a supporting document for a business transaction. A voucher must be prepared for every payment made in a business transaction. The accountant of the organization prepares the vouchers and gets it signed by an authorized signatory. Examples of vouchers include cash vouchers, petty cash vouchers, bank vouchers, purchase vouchers, and sales vouchers. Here are the main points covered in this